Highest mortgage rates since May of 2024. That's going to be the headline. Today was a rough day for the market. So let's break it down a little bit. So the first Friday of every month, we get the non-farm payrolls. Those are the payroll numbers from the month prior. It's a big number. It's even a bigger number for the Fed because the Fed has been looking for some deterioration in the employment data, and it has continued to outperform. This number is much stronger than expected and caught the market off guard. So it pretty much takes any hope of a rate cut in January off the table. And this is going to put some pressure on the Fed to pause and continue to pause for the foreseeable future. And any future rate cuts are going to be in question. So it's going to put some pressure on mortgage rates in the near term. We're well above 7%, 7.125, 7.25. The only good news regarding rates is the spread between the 30-year fixed mortgage and the 10-year treasury is much lower than where it was previously over the last couple of years. So the pain could actually be a lot worse. We could actually see rates in the 8% range if the spreads were where they were not too long ago. So we're in a good position there. It's just we're going to have to be very patient with the market. Next week doesn't make it any easier because we have a very big inflation number. So the two big reports that the Fed is going to be watching all year to determine the future of rate cuts is going to be the unemployment report, which we had today, and the CPI report, which comes out on Wednesday. If that number comes in where inflation is high, we could see rates continue to move higher from here. If it comes in a little bit better than expected, which is all we can hope for at this point, then rates could improve. So that's where we're at now. It's a little bit frustrating because we expected rates to move lower. But as a buyer and a seller, you have to look at where the opportunity is. And the opportunity right now is while everyone is sitting on the sidelines waiting for rates to move lower, we have a lot of buyers getting offers accepted. The good thing about those offers being accepted is these are people in a lot of cases that are negotiating inspection items for the first time in a long time. They are negotiating sales price and closing dates for the first time in a long time. They're not having to give up as much to get these offers accepted. Weather's, obviously in the Midwest, we have snow, cold, so people are waiting inside. Other people are out getting offers accepted. So you always have the option to renegotiate if the opportunity exists down the line. The important thing to remember right now is this year is going to feel very different than other years. Do we expect rates to be lower a year from now? Absolutely. But it's going to be a little bit painful in the near term, and you're going to have a lot of these numbers conflict each other in the near term, and a lot of volatility and a lot of Fed speak. We're going to have new administration coming in the very near future. That's going to create a lot of volatility. So as a buyer, a seller, or anybody interested in the real estate market, this is going to be one of those years for professionals. This is going to be one of those where you're going to have to lean on the people that you